Hi there, and welcome back to Weekend Update for the 6th of March. And we're seeing a fairly volatile period in the US market, and so we're still in a little bit of an indecision period. So we'll have a look at that chart to see if we can work out which is the most likely way next. So I just need to reinforce the information with respect to licensing and in particular general advice. So I operate under the license of Financial Services Australia, and all the information that we provide is basically of a general nature only, and the views that I express in this presentation are mine, and they're not intended to be trading recommendations in isolation. You still need to make up your own mind about particular trades to take, and you need to weigh those up against the training that you've been given. Now, secondarily, I need to point out that general advice may differ from what you currently understand or expect. General advice under the Australian law includes information about securities and derivatives, the underlying markets, and our opinions about or outlooks for those products. So in expressing those views, we're not providing anything other than general advice. So we just need to be very clear about the nature of this advice and the responsibility on yourself to make your own investment and trading decisions. So let's have a look at a quick overall summary of where the market's at. And first of all, we need to really have a look at the S&P to see what indications we're getting there. For me, the medium term is higher, based on the charts and also based on the fundamentals. The fundamentals including things like the massive amount of money printing, the fact that the bond market is cracked and money's coming out of that market and going into the stock market. So the stock markets are being propelled by massive liquidity, and it's really as simple as that. And that is a trend that's in force at the moment, and I see no reason why that's going to change in the short term. The question is, do we break higher from here, or do we go a little bit lower first and complete this correction that I've been talking about for some time? There's no question we're in a corrective period, but it's not certain yet that we've seen the bottom. Now with the Aussie indexes, the ASX 200 is still within its trend channel, but is struggling a bit compared to the S&P, so we'll have a look at that chart. And the Small Ordinaries Index, which basically closed something like 6 days in a row at a very, very similar level, had a pretty good move on Friday and did close up quite positively. And what I am seeing is a huge number of breakouts of smaller stocks, and that's not indicative of the end to the market. Quite often you do see that some of that behaviour, but it's a bit more manic towards the end of a really good bull run, and I don't think we're there yet. I'm not seeing that kind of pattern. When it comes to commodities, silver is clearly the leader there. It's beating gold. You look at the movements in gold and silver. Quite often you'll see the percentage move in silver be double or triple that of gold. So silver clearly outstripping gold. As I indicated a couple of months ago, that was the trend that was unfolding. Copper rebounded somewhat, and nickel, the price of nickel is still fine as well. So let's just have a look at the chart first of all of the S&P 500, and we'll pan back and take a bigger picture view. And you can see here's the lows of 2009. So we came off a level down there of about 666 points. And interestingly, we're now sitting at exactly double that. The market has been capping out here at 1332 for a number of days now, which is exactly double. So for those that are observant of those sort of things. Now you can see here that we reached a high of 1344 on the 18th of February. We declined to the bottom of the trend channel and bounced off that, which was perfect. We then rose to 13 1329. We then declined again down to 1306. We then rose back to 1332, and then we declined again on Friday night to 1321. So you'll notice that the market keeps going up to this 1332 level and stopping, but the lows are increasingly higher. We've got a low here of 1294, the next low is 1302, and the next low of Friday night was 1321. So there is definitely a little triangle forming here, and a break of 1332 and a close above it, and particularly a close above 1343 would indicate that the S&P is heading higher, and I could see that having a fairly quick run up towards 1400 or even 1450. However, there's no guarantee that this is not still part of some ABC pattern. So let's have a look. So here's our A leg. There's our B leg up to here, and it's a bit of a complex B leg, but it's possible that we've still got a C leg down here to this 1275 to 1280 area. That is still possible. I believe at this point in time, the way that this trend channel is holding, that it's probably the lower possibility, but it is still a possibility. So until that little triangle resolves itself, we can't really be sure what we've got our hands around at the moment. So this is the ASX 200 index, so you can see very similar kind of trend channel, and again the price basically bounced off the bottom of that trend channel on Wednesday of last week, and so at this stage that's still very much in order. Banking index has broken through some support levels and declined almost to the next support level, and then bounced on Friday. So that one is okay, but a little bit weaker than the materials index, which is close to breaking out into a new medium-term high there. So the materials index performing much better than the banking index in recent few months. Now look at the XSO. So you can see here we closed pretty much flat 1, 2, 3, 4, 5, 6 days in a row, and then we had a very good spike on Friday. So still some very good momentum in that sector of the market. This is the tin price. Over the last couple of years, it's backed off a little bit in the last week or so, but still tin price very, very strong. So what we're seeing, a little bit of a pullback now, is just what you'd normally expect of this sort of rise. Here's the London Metals Exchange copper inventory levels. You can see they're still rising, which is a fascinating dynamic to watch, considering the price is as strong as it is. So one of these two is going to give way shortly. Either the copper levels will start to decline, or the price is going to have to back off. So there's our copper price. So it's still in strong uptrend. Sorry, I've got the wrong chart there. That's the warehouse levels as well. I'll show you another chart of the copper price on Market Analyst. This is the London Metals Exchange inventory. So you can see it started kicking up a lot earlier than copper did, but has leveled out and has actually started turning down again. And as a result, the nickel price has continued to rise. We're now up above $13 a pound. So nickel's still looking very strong. And in the alerts this weekend, we had Western Areas added as a trade. So let's go and have a look at the charts again. And we'll have a look at gold first of all. So you can see the gold price, we're still holding this very, very strong uptrend. We're well above it. You can see the moving averages are certainly still pointing to higher prices. We've had a little close above these previous three tops here, and it looks like we're having another crack to the upwards direction. So gold almost about to break out to new time highs, and if that happens, then I could see another 50 to 150 points or dollars, fairly quickly. Silver has done much better. You can see it's a much stronger rise in silver. It's well and truly cleared its previous highs at $31, and it's basically raced up to be over $35.50 on Friday night. So silver doing pretty much what I expected that it would do. Next we'll have a look at copper. And you can see copper has had a very strong uptrend since the crash. So it's got all the way down to $1.30 here in the crash, but we're now at $4.60. So we're getting up towards 4 times the previous level, and it's really not showing any signs of declining. We've got a little bit of a sideways pattern setting up there. So copper could decline to $4.30 a pound and still be within the overall uptrend. So I think until we see that kind of break, any talk of the copper rally being over, I think, is a little bit premature. Now, one of the other things that I wanted to show you was just some of the action that's occurring in some of the small cap stocks. So let's have a look at some smaller stocks that have been coming up on the radar in the live trading room forum. So let's pan back here and have a good look. This is a stock called Cerro Resources, CJO. You can see it had previously run up and formed a peak in June of 2007 at about $1. The price then declined, as it did with most resource stocks, very dramatically, got down to 5 cents, and basically spent the last, so that was November 08. So from November 08 to current, which is a bit over 2 years, it's been trapped in this sideways consolidation between 5 cents and about 20 cents. But you can see just in the last few days that the price has started to break out above that particular trading range, and you notice how the volume has really started to kick in. So this is a classic breakout out of phase 1. Now this is not a recommendation to buy this, because if you're not part of the live trading room forum, then you really don't have enough information about entries and exits and the ongoing monitoring, because these stocks are very volatile. So this is merely to make the point that there is still very substantial momentum behind a lot of small cap stocks. Pretty classic pattern: initial breakout, retest of the breakout, and now we're off again. Let's have a look at another stock, and look, I won't even mention the name because it's not that relevant. But you can see similar kind of pattern here, massive extended base from November of 2009, and you can see the volume really starting to intensify and the price starting to break out of this zone fairly quickly. So there's probably about 100 of these stocks that I've got on my watch list. So it's just a sign that that there is still a lot of momentum behind this particular sector. So the opportunities for this week coming, they're covered in the alerts, and really one of the purposes of this forum is really to help you with overall strategy. So live trading room tends to be for shorter term capture trading. The daily alerts, more of an orientation towards the trending trading. The weekly video is there to help you with strategy and to set your overall exposure levels. And then, of course, the fourth level is the investors course, which will be starting in a couple of weeks. So the messages are there is still substantial momentum in the small caps. My suggestion is that while we're still a bit undecided on the S&P that it's probably okay to move to about 70% of maximum. You may decide to go a little bit higher based on your own risk profile, but I would keep some money in the cupboard. If you're trading the real specky shares, as I was just indicating, then maybe you should consider setting a lower risk per trade for those ones, because they are more volatile, but then again you get results a lot more quickly. Now this is what I put up last week. Basically silver is one of the most attractive games in town, so we've got the alternatives of buying silver as a CFD. There's the silver exchange traded fund in Australia. We've got silver developers such as Cobar Consolidated and Alcyone Resources, and of course we've got Silver Wheaton, which is a Canadian stock that's done incredibly well. And in the large cap trades, there are a couple of opportunities, but by and large the large caps haven't really kicked in yet. So pretty much as per the alerts, but I can tell you at the moment the action is still in the small caps, and that's where your focus needs to be. So that's it for now. Have a great week, and we'll talk to you next week. Cheers.